watching. Let's bring in our first guest. Scott Bauer, the CEO of Prosper Trading Academy, is joining us for a look at a few stocks he has his eye on. Scott, welcome. Thanks for sharing Thanks to you. Thanks for sharing part of your Thursday afternoon. I want to get into those stocks in just a minute, but first and foremost, the move in treasuries and rates attracting some attention today. I saw the Fed Chair Jerome Powell's comments as somewhat dovish. Obviously, the market sees it as differently, and clearly I was wrong.
No, I don't think you were wrong, Ben. I do as well. However, I think the market is just now accepting that, yes, rates are going to go up. Is it going to be next month? No. Is it going to be, even fourth quarter this year? Probably not, but it is coming. And I think that this is, or what we saw, that 130-ish or so on the 10-year, which was seemingly there for the longest time, maybe that was the calm before the storm. So I agree with you. I think it was very dovish. And what he said was the absolute Goldilocks position for this market. And the market could not have wanted anything differently, could not have wanted anything better. And we're seeing the reaction to it.
For the market, you mean the indices?
Yes, I'm talking about the indices. Yes, sorry about that.
No, that's fine, because actually that brings up a point I was going to make. I mean, in some ways I was thinking maybe we saw a little bit of kind of a risk premium coming into the treasuries. Maybe they got bid up a little bit into this Fed comment. Maybe they were expecting a little bit more hawkishness, and ultimately that would have brought the indices lower. So the bid in the treasuries coming out, also the bid in the dollar maybe as that flight to safety, safe haven type tendency maybe is coming out of those products. That could be an explanation as well, something I'm considering. Scott, let's talk about a couple names that are on the move higher today as well. I noticed CarMax. I saw AutoZone and O'Reilly into new highs. These stocks continue to, provide for investors, to say the least.
I mean, you talk about a hot sector out there. Everything automotive is on a tear. And we could start with CarMax where, from a technical standpoint, you're looking at higher highs, higher lows. It broke through that 140 barrier, which seemed to have been, the upper area of resistance there. How long can the entire space keep going like this? In my opinion, certainly through the fourth quarter of this year.
Wedbush actually raised CarMax's price target to $150 from $130. And again, CarMax, again, on the move. They're expecting good, better fiscal third quarter results here. It looks like they had some comments related to second quarter, related to expectations here for the third quarter. Let's talk in terms of the three names. Does one stand out more so than the other? Scott, is there any thing that we should be watching for in terms of levels or in terms of conviction that you are taking note of?
Yeah, so I was looking at CarMax and O'Reilly and AutoZone. And out of those three moving forward, I actually like the most expensive one from a dollar standpoint the most, and that's AutoZone, because I think that their forward-looking PEs are so much lower than especially O'Reilly, and that's kind of a same-to-same comparison here. But again, everything in the auto space here, at least for now, when I say now, I'm talking about really this next quarter here, I believe is going to either grind higher or really move higher. And I think AutoZone has the best opportunity for that move higher.
All right, I'm looking here. Last week, it looks like O'Reilly actually got downgraded. Again, they were, B of A Securities brought them down to neutral from buy. They've got a $680 price target on shares. Let's move on. Boeing on the move. They estimate that China's 20-year commercial aircraft market, is nearly $1.5 trillion. They think that, Boeing forecasting that China's airlines are going to require 8,700 new airplanes by 2040, valued at, again, 1.5 trillion to meet expanding commercial air travel demand.
Yeah, and I don't know how much the market is really taking into consideration a projection that's going out 18 years or 19 years, right? So when I look at Boeing, I look at a stock that really has been defined by a range for quite some time, 205 to 255 or so. You can tighten that up a little bit here. But from a technical standpoint, Boeing has made a little bit of a nice recovery here, but is quickly approaching right now some serious resistance up at the 50 and the 200-day moving averages, which are between the 222 and 227 area here. So in terms of a trade, not a longer term investment, but But in terms of a trade, I would absolutely play the range with a slightly bearish bias to it.
All right, Boeing, well, down to 89. If you remember, it was grounded last year, and it's now been, again, a little bit of a lift off those lower levels. 221.58 last, they're up 2% today. Let's talk DRI. Let's talk Darden, up almost, well, 4%. Last I looked, that was a little bit earlier. They beat top and bottom line estimates, and they raised their fiscal 2022 EPS. What are you seeing today in terms of ticker symbol DRI? Looks like they are up, well, 6.25% right now, up to 164.28.
That was the most impressive part of what I saw out of their report was the guidance that they gave. You know, their comps in terms of beating top and bottom line impressive,
right.
But the fact that completely breaking out. I mean, you look at a breakout here, that had been up against a wall right around 152 or so. This thing has broken out. And from the option standpoint, look at the option volume today, Ben. Massive amount of option volume. So now you see, you know, traders, investors really flooding into this here. And I can see this thing, you know, really sustaining this breakout and maybe grinding higher to the 165, 170 level.
Scott, talk to me in terms of what we watch as we head into the end of the week as some of the dust settles from the Fed. We've got a couple Fed speakers tomorrow. I noticed the new home sales data to kind of cap things off. Actually, now that I think of it, next week we have some housing numbers as well. That's been, well, in addition to the Fed, it's been one of the major focal points this week.
Yeah, I really wish that we would not have made this rally back in such a quick fashion. I don't think that's good for the market. I don't think it was good for the market when we saw the Dow down 1,000 and then closing down 600 a few days ago. And I don't love this huge snapback. So I do think that the volatility is not gone. I don't think the dust has really settled yet. The continued trajectory to the end of the year, I believe, is still higher. But I think we're going to hit some bumps in the road.
I want to just kind of pull a chart here to sort of speak or provide a visual to speak to that point. VIX here again. Holding above 20 right now. This is the futures, down 7%, but just the visual here in terms of it sort of speaks to Scott's point, the 1,000-point drop and then the recovery we've seen, the magnitude of it, the extreme nature in terms of price activity over time is what has volatility on the rise. So we'll continue to watch this, Scott, right back in the middle of last month's highs and lows, the range that we established in the month of August. So, Scott, appreciate you joining us. A great breakdown in terms of a couple stocks you have your eye on and, well, kind of a look at the week that was, I guess. Scott Bauer, the CEO of Prosper Trading Academy.
Thank you.
Thanks to you, Scott.